So this video is something that you want to watch because I'll be talking about what separates a pro trader from an average trader. You know, the main difference is all the mental game, it's all the mind game. This isn't about psychology. This is where I'll show you the big picture game where, you know, when you trade, there'll be times where you'll be losing. In fact, all traders lose. Alright? But it is what separates what the pro trader knows, what he thinks, what is the mindset that he faces when he's currently facing a loss or a series of loss versus a new trader or an average trader. Alright, if you have the same mentality as a pro trader, using this concept of the law of large numbers, you will know that you are in the right hands. You know, a lot of times when traders trade, they are actually on the path to success. But along the way, at this path to success, there will be bumps, there will be failures, there will be losses. And a lot of them drop out along the way. But what they fail to know that they are actually on the right path to success. This video shows you exactly the stage that you're in right now and how should you go so that you'll be on the path to success. Alright, so I'm going to load my MT4 chart right now. Let's go. I'm going to touch on this important topic of the law of large numbers. Now, the law of large numbers is all about quantity, right? So, for example, if you take like, let's say 10 trades, right? If you take 10 trades, if you let's say you win 7 of them or you win 10 of them, does it mean that you are a profitable trader? Probably not, right? It doesn't mean that because the scale is too small, right? The scale is too small. But on the other hand, let's say if you trade, let's say, let me make this smaller a little bit. Let's say you trade 1,000 trades. And in that 1,000 trades, you made maybe 600 wins and 400 losses. Now, is this scale more accurate than you making 10 wins in 10 trades? Definitely, isn't it? So therefore, the law of large numbers is highly important in our trading. So how is this so? So for example, let's say when we are actually trading, right? When we are actually trading, we are looking at, you know, a lot of times when traders, when they trade, they say that, wow, I'm successful in a month. And then we may ask them further, like, how many trades do you take in a month? Like you say, I made 5 trades and I got 4 out of 5 correct. Fantastic, isn't it? You make 5 trades and you got 4 out of 5 correct. But that is only 5 trades. What happens if so for example, if you get 4 out of 5 correct, or let's say you got 8 out of 10 correct in 10 trades, their winning ratio is, let's say, 80% in that 10 trades. But that range of 10 trades isn't enough. It's just not enough for you to qualify that you are a good trader or that strategy is working for you. So therefore, we need to go in a wider range. And that is the reason why in one of my previous videos, I talk about that you need to backtest your strategy by years, right? Backtest your strategy by years. So what do I mean by that? You see, for example, if let's say, okay, let me go to this chart. Let's say you are trading and okay, blue. And when you test your trading strategy, and your strategy clearly shows that maybe you have back tested it by 5 years, and that should be a good enough data, right? 5 years of data. So let's say in 5 years of data, maybe 1 year, maybe you entered 200 trades, example. So in 5 years, you have entered 1,000 trades. So that is a good sizable data whereby if you are profitable in that 1,000 trades, right, with, for example, with correct risk reward ratio, etc., and let's say you are profitable in that, let's say you're profitable maybe 60% of the time, and your risk reward ratio, let's say, is 1:1
1.5. Now, 60% win may not be a lot, but 60% win at a risk-reward ratio of 1 is to 1.5, meaning every single time, let's say you risk 1, if you win 1.5. That is going to make a heck of a difference. Even if you win at 50% of the time, right, out of 1,000 trades, and your risk-reward ratio is also at 1 is to 1.5, that is a heck of a win. Okay, so but the equity curve, let's say you have done your research, and then you have done your studies, you've done your back testing on the strategy, and your strategy, let's say in that year, let's say this is the chart, okay, this is the time frame in terms of years. Like, let's say here is 1, right, here is 2, 3, 4, and 5. And then this is probably your profitability. Okay, so year 1, when you go, for example, it will be kind of like this, like maybe up. There'll be years, there'll be months whereby you drop, it goes up, you drop, it goes up, you drop, it goes up, you drop, it goes up. So overall, you are in a good shape. You can't expect this like this. Maybe if you zoom real outwards, maybe if this is scale of not say 5 years, maybe the scale of 20 years, then maybe the fluctuations in between is actually very, very minimal, right? And this is considered a fantastic strategy by all means. So, but what happens is a lot of traders, when they trade, when they look at this, they'll be wondering, for example, let's say you are trading, let's say I'm entering a new trade right now, or I'm a new trader. I've just learned this set of strategy, or this system, right? And I enter the trade for this month, right? But for some reason, my equity is my chart for that month. Let's say my chart for that month, instead of it going up, it is actually a down. And then I may think that, hey, this strategy isn't working for me. But what you may not realize is that your trade in that 1 month, maybe 10 trade, belongs to the chart over here, right? There will definitely be losses in your trading. Definitely. There'll be months of wins and there'll be months of losses. But as long as your system is right, when you backtest right in the large enough scale, you will be confident to know that at times of losses, when in that month your chart is like this, you are actually only in scenarios over here, over here, over here, and here. So there's nothing to fret. There will be months whereby you have wins like this, and then you think that, wow, this is a fantastic system. But there will be months where your system will go like this, and you will go down. And then you may think that, man, there is something wrong with this system. I don't think I can trade with this system anymore. I need to get out quick. I need to start finding the next holy grail, right? No, what you need to look at is the law of large numbers. Run your back test to have a large enough numbers such that you know that, hey, this works in the long run, right? If this works in the long run, what I'm facing now is the dips of the falls in the overall larger picture of my growth chart. So therefore, you need not be too affected by this. And then, wow, when the market stop, when you start losing your money, you start making tweaks to your system, you start editing this, you start probably trying new stuff, etc. No, stay calm, because trust your system that this works in the long run. A lot of traders, what happens is fall into this kind of potholes, and that what they may not realize is that while you are actually on the path to success, while you are zooming in on this kind of losses, you decided to stop trading, you decided that this system is not for you, you decided this strategy is not for you, and then you go on looking for the next silvery, blinking, twinkling stuff. So, are you following what I mean? Yeah. the game is about probability in large numbers. So I'm just going to show you an example, all right? Example in the MT4 itself, okay? So let's say this is a simple example. This pair is USD SGD. This is the dollar Sing, all right? I'm just using a simple strategy of the crossing of the Bollinger Band. So I have my Bollinger Band over here. Bollinger Band is typically 3 lines, right? I would not want to go in depth into this strategy. So for example, my strategy for this pair is that whenever it crosses the middle of the Bollinger Band, likely it will go to the end. So for example, I enter here, I get out here, I get a profit, right? I enter here for the buy, I get out here, I get for a profit, or maybe I can decide to trail it. But let's say as I go along, I enter here, I get out here for a profit, right? At this point, I enter here, I place my TP here, but I didn't get it. So then it went down, and then I enter here again, I get out here for a profit. So I entered here for a sell, I get out here for a profit. I enter here for buy, I get out here for profit. I enter here for sell, I get out here for profit. I enter here for buy, I get out here for profit. And so on and so forth. So I enter here for a sell, I get out here, may or may not be for profit. This has been a loss. This has been a loss. This is a win, entry, profit. Entry, profit. Right? Here. Let's say here, entry kind of profit. Entry, profit. Entry, profit. And entry profit, blah, blah, blah. I can run it on and on, entry profit. So this may be a system that works, or this may be a strategy that works. I'm not selling you this strategy, not selling as in the terms whereby, hey, go ahead and go and use this strategy live. No, this is only one Bollinger Band that I use on my chart. So no, what I'm saying is that at times whereby when you run through a system like this, fine enough, in 5 years, let's say, and you realize that you are actually profitable in this system with good risk-reward ratio, etc., good lot size, good business, good risk management, good money management, you are profitable in the law of large numbers in a scale of 5 years. But there will be times whereby when you trade, let's say when you enter on this trade, there will be, let me go to an example where it didn't work. Yeah, here. Maybe you enter on this trade, hey, it didn't work. Maybe you enter on this trade, hey, you didn't get out the full TP, right? So you are in essentially the spot whereby, coming back, you are in the spot of the dips. You are in the spot of the dips where you are zooming in at the dips and then you are looking at the chart, right? And then you see your money going down. But when you run through the law of large numbers, in 1, 2, 3, 4, 5, when you gain confidence in your system, this doesn't mean anything to you. You'll be less emotional on this kind of losses because you know at the end of the day, the system will run itself out. Cool? Yeah? This is the mentality of the big boys. This is the mentality of the pro trader. Do have that kind of mentality, and this will set your trading into the right direction, into the right shape, into the right light. You actually are on the pathway to success. It's just that these humps are the one that make you think twice. So I want you to think in a brand new light, in a law of large numbers light, and all the best in your trading.
So I hope you enjoyed this week's episode. Do leave a comment below and let me know what you think, and it will be really awesome if you hit the thumbs up button. So I release new videos like this every Monday, and if you enjoyed it, do click on the subscribe button so that you will be instantly notified once I release a new episode. See you on the next video.